Okay, are foreclosure properties the only hope we have for the U.S. housing market? I don't know. We'll have to find out shortly. Welcome to Housing Bubble 2.0 News of the Week, or as I like to call it, another episode of As the Housing Market Turns, or spins, or does whatever. I mean, things are changing, things are status. I don't know what's going on these days, right? It just seems a lot of rhetoric is happening. We got to sort of sift through it all and figure out what the deal is. So, today is actually going to be, I think, a fairly important video. And I'll be honest with you, I was going to try and record a 10-minute video today because clearly people think I talk too long, whatever. It doesn't bother me, but I figured I'd give it a shot. But actually, as I was sort of going through preparing this, I thought, you know what, can't do this one in 10 minutes, guys, just because I won't do it justice. And I think it's important to make sure people understand what I'm looking at, where things are going, what I think is going to happen, so you can chime in from that. So anyway, Randy Patrick here, putting the realism back in real estate. And that's important because it is realism. We hear a lot of what's going on in the media these days and what we read. And, more and more people are kind of coming out now talking about maybe we're going to have some issues. Maybe there's going to be some opportunities or some distress happening the next little while. And I really think that's important. And to me, this dovetails with the last video I put out. So if you haven't watched that, maybe go watch that one first, come up to this one, and it'll kind of make more sense. So again, having said that here, I enjoy real estate and hope you do too. And if you're not already a subscriber, if you could please subscribe and smash that subscribe button, help my channel grow, I would really appreciate that. So thank you very much. Alrighty, so what do we got on the agenda for today? Are foreclosure properties the only hope for the U.S. housing market? Well, why am I saying that? It's like, hey, you know what? Low inventory, high prices. We're all waiting for something to happen. And this is kind of like what we've been sort of hanging on by a straw here, going maybe we're going to have some relief when this stuff starts to open up. And as a caveat here, some states are opening up, some properties are going to picking up the foreclosure process or going to auction sale now. So things are changing. Yes, the moratorium is still in place, and yes, the moratorium was extended from the end of this year, December 31st till end of January, and January 31st, 2021. We'll have to see how that plays out, but things are still starting to open up very slowly in different pockets across the country. So basically, let's put things into perspective, and the housing bubble is here. We're in a bubble. No ifs, ands, or buts about it. People are talking about it. People are agreeing with this. This is not just me. And, I've been talking about this for 3 or 4 years. There are other people agreeing that we are overpriced, all right? This is the most recent Case-Shiller information. You can see that this little chart here, the top index, national index, you can see that our peak was July 2006, and there was the level, which was, I guess you could say whatever the calculation was. And you can see that where we are in the peak, which this would be September 2020 Case-Shiller data, we are almost 23% above the previous peak in the last housing bubble, which was 2006, for the previous housing bubble. So though there were people that will say, oh yeah, that's fine, but it's all relative because wages are up as well too. But wages and housing prices have not gone up on we'll call it an average equal basis, okay? Housing price growth has far outstripped and beat up wage growth. That's a well-documented fact. If you're welcome to go check it out. So housing bubble is here. The unknown is how this housing crash part plays out. And in my last video, I was talking about how's it going to happen, the process, etc. The thing that it's I believe that it's going to be managed, and that everyone's going to want a piece of the action here. And it basically is how can the less damage be done, where certain people or markets or organizations stand to gain the most. In the end, the person's hurt the most is going to be the homeowner or the renter, etc., who suffers. Will suffer if the homeowner is defaulting as well too. So really, the issue is how this is going to play out. All right. So I look at this going, the opportunity starting in 2021, and you'll see why, and right now. So the whole point is, how's the opportunity working for you? Well, you can purchase discount properties if you're an investor. This could be the best time to become an investor. And why I say that is, people always believe and want to get involved in real estate when they're at their peak. Well, that's actually the wrong thing to do, because when it's at the peak, it can only do one thing: go down. So really, you want to buy on the way down or at the trough, at the bottom, and that way you're putting together better pricing and you've got equity growth in the future. if you need properties for your rental portfolio, it'll be a good time. If you want to start a fund for your rental portfolio, it'll be a good time. If you have a 1031 exchange need, a good time to identify some things now. If you're a foreign investor, nice to jump in the market on a going forward basis. Or if you want to purchase the better priced property, there should be opportunities coming in the future. But the problem is we can't wait. We're pent-up demand, frustration is there. I get it, guys. I commiserate with everybody as to what's going on here. All right. So again, contact me for a consultation to talk about this stuff. So really, this came out the other day, and it's really the cities that are vulnerable to foreclosures. So what really happened is Adam Data Solutions put out their, I guess, November 2020 sort of foreclosure look here, which is great. And I noticed that every month now when they put out their information, they're actually putting less. It's more high-level synopsis, less detail. So I guess they're getting smart. They don't want guys like me talking about it and spilling the beans, I suppose. But whatever. Anyway, the whole point is that we're seeing in November we saw just over 10,000. I guess you could say foreclosure filings, properties with foreclosure filings. That means default notices, scheduled auctions, or bank repossessions. So that's the entire foreclosure spectrum there. The number's down 80% from a year ago, and obviously, the guy here who's from Realty Track, he's the executive vice president, is basically saying, hey, it's not unusual to see foreclosure activity slow down beginning November and through the holiday season. Both foreclosure starts and repossessions are down 80% on a year-over-year basis, but it might be noteworthy that a few cities may be vulnerable to the pandemic-driven flight from urban areas to the suburbs, like New York City, Chicago, and Miami, were among the markets with the highest level of foreclosure actions. Now, clearly, those three locations, because if you take a look at my foreclosure tour videos, at least I did talk about the greater New York area, which is huge, Chicago area, Cook County, huge, and Miami, the biggest part in Florida. So these three locations, what he's mentioning, that's where a lot of the activity is taking place because of just the sheer volume and population, what's going on. Our regional breakdown. So the states with the highest foreclosure rates are Florida, Illinois, Oklahoma, New Mexico, and Delaware. So again, it just depends on the state, the structure, the local moratorium in that state, and whether lenders are moving forward with some of the foreclosure filings or repossession. So again, a lot of things at play here. But the whole point is, we're talking about this now, and that's the difference. So really, the past few months of narrative has just been housing prices going higher, and you've got certain writers from certain websites, which I don't even bother to look at now, or I'm not even going to show on here because it's pointless. But the point, their perspective is, hey, don't worry about what's going on behind the scenes. Everything is great with low interest rates and high demand, low inventory. Housing's wonderful. Well, that's not the case when it comes down to people. Everyday people like you and me, people who just want to buy a home to live in. They're frustrated. You're frustrated. I get it. So that's not the real market. The real market is being controlled, and as we talked about, the narrative and whatever. And I know when I say these words, narrative, YouTube flags me or whatever, and I don't get as many views. I get it. But, we just have to talk about it because that's what's really going on in the marketplace here. So again, as I said, by state, the highest foreclosure rates are Florida, Illinois, Oklahoma, New Mexico, and Delaware. Florida and Illinois, yep. So now we're starting to see the traditional leaders in foreclosure statistics kind of come up. New Mexico's interesting. Delaware's interesting. Oklahoma does have a few, a pretty good size foreclosure base as well too. When we look at the metro areas of 200,000 people or more, the highest number of foreclosure filings were in Champaign, Illinois, Shreveport, Louisiana, Macon, Georgia, Davenport, Iowa, and Evansville, Indiana. So we can see stuff happening in some of these other markets here. Again, larger metro areas topping over 1 million people, posting the most severe foreclosure rates include St. Louis, Missouri, Cleveland, Ohio, Jacksonville, Florida, Louisville, Kentucky, and Birmingham, Alabama. So essentially, we're seeing certain markets starting to open up and increase their filings and their activity, whereas nationwide property started foreclosure in November, down 13% from September and 75% from a year ago. So why is that important? Well, it's, and the comment was kind of made earlier there by the guy from Realty Track, who actually, that's a subdivision of, Adam.com or AdamDataSolutions.com. But the point is that, traditionally, when you have a Thanksgiving week, not much is going on, and into the holiday season, everything slows down a bit. And when you have like a between the December 24th and New Year's Day, a lot of things just don't happen at the courthouse, attorneys, foreclosure auctions, whatever. And I can also tell you, even though we do have the moratorium on for FHA and government-backed mortgages, traditionally what has happened is those groups tend not to foreclose over that period of time. If there are scheduled auctions, they may give them a little break, postpone for a month or etc. because nobody wants the negative PR of putting people out, families out into the streets via foreclosure, auction, eviction during the holiday season. It just is what it is. So I guess it's the nice thing to do, which certainly makes sense here. Okay, so realize that banks seized only 2,000 properties in November across the nation. That's down 22% from September and 86% from the year before. So yeah, because of the moratoriums, because of the lack of foreclosure funds, everything is down. So we can take a look at, when I look at the numbers, Florida, Illinois, California, Arizona, and Georgia were the most REOs or completed foreclosures. So REOs means real estate owned, which basically means it got foreclosed on, taken back by the bank in their local inventory. Okay, the most REOs were filed in Chicago, Illinois, Phoenix, Arizona, Atlanta, Georgia, Birmingham, Alabama, and Miami, Florida. So you can see, like normal, the typical leaders are starting to lead the pack in most of the statistics now. Nothing to be surprised at here. Now, this is sort of what I want to get into. So this is kind of I guess you could say part 2 of my previous video, because there's more information here about what's going on. And I guess what I'm seeing is there's more, as I said, more discussion, more acknowledgement that there are these foreclosures here, that foreclosures will be expected, that forbearance is around, but if forbearance is not going to solve problems for everybody, and those that typically had their problems solved are out of the forbearance right now. Those that are in forbearance are most likely going to continue with problems with their homes and move to default and eventually into the foreclosure process. Also, delinquencies, seriously delinquent mortgages are increasing. So every month goes by, those that aren't paying get more and more serious, and those that were early in delinquencies, not serious, will move to serious delinquent status as well too. So the point here is that, again, more discussion on this. What's the outlook for the future in real estate in 2021? Well, everyone talks about roller coaster ride. Everyone talks about moratoriums being extended maybe to the end of Q1 2021 to get us over the next pandemic wave, I guess you could say. Problem we're also seeing here is that there's less homes available on the market that are distressed. There's less homes going to auction. The ones that are going to foreclosure auction are being bid on by more people, and thus their price points are going up. The homes that are taken back by as REO at the bank that are being sold are actually going to, like, they're costing more because there's more people vying for those as well too. So it just retail is getting hit hard, and guess what? Now the investor side is getting hit hard as well too. So that's the problem that we're really seeing here. And I wanted to sort of go closer here so I can take a look. So obviously, we're below the 2019 pace with respect to all the distress movement and stuff like that. So the real issue is that delinquencies are at an all-time high. That's the headline. But what they're saying is that listers must consider some factors before panicking, or view this like we have viewed seriously delinquencies a decade ago. So there's a record level of homeowner equity in the market at $6.5 trillion. I believe that data suggests that over 70% of homeowners have more than 20% equity. All right. So again, your basic concepts will be that if you have equity, then you will sell. You'll stop your foreclosure. You'll take something in your pocket and you'll move on. Well, but I guess the question is, where do you move on to? I know when I say realism back in real estate, I know the people who aren't paying their mortgage now because they can't, who are suffering from shutdowns, COVID, financial distress, whatever. Where are you going to go, right? That's the problem we have. That's a real problem with this market segment. And the fact of the matter is, the longer they stay, the longer they eat into their equity, which means it's not as lucrative for them to sell, because if I sell today and get 10, 20 grand, I got to now put first and last ones down and move. Half my money's gone. Okay, so it's that type of concept that I talk to people on a daily basis about. So this is a real concern for people and the situation we're all in here. So there's acknowledgement that so their perspective, or the one guy's perspective here, is that having equity gives them opportunity to get out front of the foreclosure before it happens and sell a house, probably at a profit. I don't agree with that. The exception to the rule might be FHA loans, which are running about twice as delinquent as the overall loans, which I agree with here. And the FHA borrowers at the low end of the spectrum on the income scale, who probably took out a loan with little down payment. So what's the great thing about FHA loans? 3.5% down. So, if you need to sell quick, think about this. Put your home on the market with a real estate agent. Right away, if you sell with a real estate agent on the MLS, monthly listing service, what do you have? 6% commissions off the top anyway. You put 3.5% down and maybe an extra money you brought for closing costs, etc., and you sell with a real estate agent. Did you gain equity? Maybe, maybe not, depending on where you bought in the marketplace. But 6% is greater than 3.5%. So you're dipping into that equity to pay that and some closing cost numbers as well too. So this is where it's going to get dicey for a lot of people. That's why FHA borrowers are definitely exposed, which is pretty crazy here. So when we take a look at things, again, delinquencies are at an all-time high. The FHA stuff here, I guess you could say, this is where we have a real dichotomy now. The last sentence here between record high levels of serious delinquency and record low levels of foreclosure activity. So this is right. So because of the pandemic, COVID-19, moratoriums, eviction moratoriums, foreclosure sale moratoriums, lack of foreclosure processing, there's virtually nothing's coming on to the market that are distressed and available. Okay, yet we see that this volume is building behind the scenes, and that's that's kind of the dice here. It's like we're rolling the dice, going, how much is that volume actually going to be available to us? How's it going to play out? How's it going to affect the marketplace? Okay, so that's the dichotomy, which I always believe that for the past while we've had this situation with the market being in a dichotomy. So now the other guy on the I guess you could say the article, and there was a webinar about this which I watched yesterday. His name is Darren Bloomquist. He's a VP at Auction.com and part of Adam Data Solution. He basically said, detailed Auction.com's predictions for the foreclosure and distressed property market in the next 5 years, applying a model that accounts for unemployment, home equity, serious delinquent rate, among other factors. He anticipates that between 1.8 to 3.3 million completed foreclosures will happen over the next probably 5 years. So he's talking starting in 2021, we're going to see that. So to me, that's actually a pretty good number because I'll tell you, a couple of weeks ago when I saw another webinar, that number was a bit lower. He was predicting 1.5 to 2 million, and I guess from what we're saying here, we're looking at 1.8 to 3.3 million. So again, numbers change and numbers move on, but I guess you could say, they're getting more bullish on how things are going to play out as we get more information. So this is pretty important here. So for me, this is okay. Now, but I want to be clear here, okay? 1.8 to 3.3 million completed foreclosures, all right? So a completed foreclosure is, to me, it's sold at auction. Now, what I don't know, whether he's saying these are all going to be just, again, completed foreclosures, which means homeowner lost and somebody else now owns the property. Is this all REO volume or with lenders, or is this, both where people are buying at auction a portion of this and some are going to the REO market as well too, or back to lenders? So I don't know. I'm probably going to assume it's a blend of both here. But this is what I do find interesting because in their world, so Realty Track and Auction.com and Adam Data Solutions, I mean, they're dealing with the post foreclosure, which is really foreclosure. It got foreclosed on, so it's like now it's an asset, with the bank and available for purchase in the future via different ways, or it was purchased at auction by a third-party bidder and it's no longer available. What nobody considers here is the pre-auction or pre-foreclosure component about the short sale business, which I find really interesting. Listen, I know that every month when I put the National Association Realtor information up and I show you the one chart that they produce that shows distressed properties, and distressed properties are made up of what? Short sales and REOs, or real estate owned, taken back by the bank. Okay, well, that's just 1%. So really, if you divide that by two, half is short sale, maybe half is REO. 0.5% of all the transactions across the U.S. on a monthly basis are short sales, which makes no difference here. But the component, or the point I'm trying to make here is that it can make a big difference, all right? Because that's the opportunity. So he's not even considering, what I would say, or at least he's not telling us that he's considering, pre-foreclosure, like pre-auction solutions, which are loan mods and short sales, actual transactions being done. So he's just talking about people losing their homes. So I always look at it going, there's going to be a component that's going to be people who are doing a real transaction. They're still going to have to move out, but it's a short sale. It's not a foreclosure. But again, so I'd like to see if we can move some of that 1.8 to 3.3 in front of the auction and see if we can get our hands on those and help homeowners and get ourselves some cheaper property along the way. So again, I just think it's an important distinction to make here as to what they're saying. But I want to say, though, I'm happy that they're talking about this, because last housing crisis, we didn't talk about it because we didn't know about it, or it was happening too quick. We didn't have the data at our fingertips, okay? So in the end, they closed saying they don't want to downplay the impact of the pandemic. We both expect to see default activity increase. The question is how big it will be and how severely it will be seen in foreclosure activity. On the bright side, he concluded, there are going to be a lot of opportunities for both investors and real estate professionals and, in a way, for homeowners, because as sad as it is when someone loses a home to foreclosure, there is an opportunity for new homeowners to come in and have a chance at their shot at home ownership, which is great. But let's dig into this a bit more, okay? A lot of opportunities for investors and real estate professionals. That basically is investors, which could be mom and pa, average Joe investors, all the way up to the corporate real estate investment trust investors, and real estate professionals, which are primarily real estate agents, but less for homeowners, because we know that homeowners aren't traditionally going to buy at the auction. All right, it's not something that homeowners do. Most people buy with financing. You can't buy with financing at the auction, at least like a traditional mortgage. If you have hard money loans or whatever, sure you can. But the point is that it's risky for those that don't know what they're doing, and there's certainly things you have to look out for. But so to me, this is the wealth transfer. So investors who are buying all these properties, and let's be clear here. If it's going to be at the auction, it's going to be larger investors who can beat out smaller investors. That's where you're going to see. So this really equals the wealth transfer. This will start. It already happened back last housing crisis. It's happening right now. It'll be more prevalent as the next couple of years play out here. So please be aware of this. Why am I talking about this? Because listen, nobody else does. We got to talk about it, okay? Because we all, again, I don't watch anybody else's videos. I just see the thumbnails. I see all these housing crash 2021, this and that going on. Will there be this? Where is housing prices going to go? Well, you know what? I don't know. You guys watch it. Is there substance behind what's being talked about in a 10-minute video? You'll have to tell me that in the comments. But the whole point, though, is that we're being set up here for wealth transfer, and that's what's going to go on. So how can you get involved? You need to get involved. You've got to figure this stuff out. Now, I don't want you to be alarmed with what I'm going to talk about now, and because I've been thinking about this for a number of years here. And knowing what happened in the last housing crisis and what we were able to do and not able to do, the changes that have taken place, and now the way things are, how the market was controlled in our recovery, and where things are now with eviction moratoriums, foreclosure sale moratoriums, and this constraint that's on us right now, which is causing low inventory and massive price appreciation or artificial price appreciation. I look at it going, is this going to be our last kick at the can to get some decent priced properties? Because we have what's going on is, the financialization of housing, okay? And you read that. It's a complex system of government policies, financial instruments, individual and corporate buyers. It is often associated with structural market changes whereby housing is increasingly being treated as a commodity, as a means of accumulation of wealth, and as securities that are traded and sold on local and global markets, okay? So yes, that's happening. So the single-family residential home is the number one asset class out there, right? Because as population grows, as builders can't build 4 million homes a year, we're running out of homes to put people in. So of course it's going to go up in price. And now when we have these unnatural constraints on the market, it just pushes things to that higher level, causes more damage in the long run. So for me, it's kind of like, is this the last kick at the can to be involved in this? Here's how I see this playing out. And again, don't flip out about this. I'm just putting this out there because I do see how things may play out. It's not how it's going to play, but saying, think about this, right? Well, this is the last time we'll be able to do this. What I mean by that is short sales and REO and volume and opportunity. So I do believe that this housing crisis, housing bubble 2.0, okay, is what I called our second chance at a once-in-a-lifetime opportunity. If you were paying attention to the last housing crisis or involved, it was a once-in-a-lifetime opportunity, and people were saying, well, probably never going to see it ever happen again. Well, here we are, fast forward a decade plus, and we're going to see it happen again. But I believe that people are going to try to, and people meaning generically, the government, Wall Street, other housing bureaus, departments, whatever, lenders, everyone's going to try to control this to maximize their own agenda. Simple as that, and dollar value. So that's what people do. Don't cry over it. That we know it, so we got to figure it. Okay, figure it out. So I don't think this is like the last time I think we're going to see the short sale and REO volume opportunity hitting the marketplace. Well, why? Because I foresee that in the future that they don't want this to happen again, right? Or maybe they do, but the point is that they'll find a way to make it unavailable for us. They're already trying it right now, and they're having success going, look, we can get people to buy at the top of the market, and those that are buying the top of the market are going to eventually fall into the same trap, and we're going to be able to take their homes away from them as well, too. So this is what's going on, all right? So they're going to make this unavailable to small investors and regular buyers. They're going to build in financial loopholes with partner programs with, hey, we'll go to the homeowner. You can't pay your mortgage? We'll solve your problem. Why don't we just discount it and let somebody else buy it, let the large money guys buy it. We'll write off the loss, and we'll provide you voluntarily give your house back to us, and then guess what? We'll convert you into renters, so that they're going to transfer assets, built-in rentals, and they've made money somewhere in the way. Okay, that's how I see this going in the future. So it's almost like an internal iBuyer type of arrangement. That's what I envision. But again, I'm just thinking about out loud here, so don't flip out and freak out about this. There's going to be ways we can work around this, of course, because when there's roadblocks and things, innovation always wins out in the end, right? I do see more government involved in housing. It's already started. We got a lot of government involved in landlord and tenant stuff, which is making it more difficult for landlords to maneuver, and it's giving tenants more rights. Not that tenants shouldn't have more rights, but I think there's points where it's counterproductive. And we know that some of the proposals that are put out there by some of the political parties out there are not good. That are really are not good for housing. I'll just leave it at that. Okay, and so it's already kind of started. So I expect more government involvement. Which we know when there's more government involvement, it's never good, right? I mean, hell, they're trying to rehab properties now. And I mean, if they can't even handle the stuff like this, how are they going to be able to rehab properties at cheaper prices for people, right? Come on. So all hope is not lost here. Why? Because we know this is going to happen. We're watching this play out in real time here. Or at least we have a pretty good idea how this is going to happen. That's a very powerful concept. So it allows us to get ahead of the game. So what I'm saying to people right now is don't stand by and watch it go by, all right? Start to educate yourself, start to get involved, start to look at your local market, start to go to your real estate association and get statistics that are available online very easily, and figure this stuff out. And what I mean by that is when people go right, you go left. Do what others aren't doing. And I heard this the other day, and I like this. The riches are in the niches. Now, where I come from, we don't say the word niches. We call them niches. We use the French part of it, okay? Kind of like foyer and foyer. Okay, that was difficult for me when I moved down here. But anyway, but the riches are in the niches because it rhymes. Take control of your real estate needs and think outside the box, right? And why am I saying that? Because I do have to chuckle here, guys. I really do. And I get a kick out of it when people contact me because, you know what? Your real estate agent is not going to bring you your dream home very cheap on a silver platter, all right? As I said earlier, I always say every video, I'm putting the realism back in real estate, all right? So this is not going to happen. And I again, don't be offended by this next statement because maybe I'm in an offensive mood today. But here's the funny thing: I get lots of emails from people when I say, let's talk about real estate and let's engage. I don't mean me looking all over the creation for properties for you. I get people who are saying, I'd like a property, that's 2,000 square feet minimum in these locations on, with 5 minimum acres, and it's got to be built after a certain time frame. And oh, by the way, I don't want to pay any more than $250,000 for it. So you're giving me a laundry list of your wants, which, quite frankly, they're not available right now. That's why I laugh. I'm kind of going, I'm not going to come to you with my silver platter going, I've just found what you're looking for, okay, because it doesn't exist, all right? And it's not going to exist unless we collectively, because I do this all the time, but, unless you take more effort and interest into your own real estate future, okay? Because, as I said, it is financialized. It is a commodity. It's an asset class now. So that's where there's more and more what we call dry powder waiting to buy stuff at the auction here and compete with us and make our lives difficult. So this is the market's changing, but it's still an opportunity. So when I look at that one slide, when I see 1.8 to 3 million, foreclosed properties, every one of those foreclosed properties is an opportunity for us to purchase before it forecloses. Okay, it gets foreclosed on. And when I say an opportunity, it's an opportunity for you as a buyer or investor. It's an opportunity for real estate agents to earn commission, for title companies, the other ancillary services to earn a living on the real estate market. Okay, and you're also helping the homeowner out as well too by settling the debt and making their transition a lot easier than just having a foreclosure, a negative impact on credit and future financials, and being evicted from their home. You know what I mean? Leaving in the night, stuff like that. So again, that's what I'm trying to put into play here, guys. All right. So look, I've hit over the 30-minute mark now here. So basically what I'm saying here is that get it before the auction. I have the ways. I can show you how. All right. We're going to see more of this. Certain states are opening up. I'm already, as I say, in Florida, I see stuff happening now. I don't see dead people, but I see auctions. Okay, that might be a good one, right? I see auctions. That's the way it's going to work here. And again, maybe I'll change the thumbnail so I could put that on there. But I see auctions. I like that. So anyway, the whole point is that let's start thinking outside the box. And listen, most people that are contacting me are starting to do that, and that's a positive thing because I can certainly guide you or give you some advice, which is great. It's not that difficult. It's just going to be that. And again, I'm not trying to downgrade or push down the real estate agent component, but the number one complaint I get is that you can't find anything because your real estate agent, what are you doing? They're only going to look on MLS. They're going to look on Zillow, maybe the odd for sale by owner site, but that's kind of it. So they're not going to spend thousands of dollars a month on marketing to specific niches, right? The riches are the niches, and generate these leads for you because this doesn't work that way. And so that's why I look at it going, taking more control and talking about how we can look at these things together is sort of how it needs to play out here. So again, two housing narratives in play. As I always say, K-shaped housing market. So the top part's going up, the bottom part's not coming down in the K, but it's starting to happen, starting to grow. Every day that goes on, so every day that passes, when you look 30 days plus forward on the foreclosure auction calendars, you're going to see more auctions being set for sale, which is opportunities right now. So right now, depending on where you live, you can connect with those people and you can help them and create yourself an opportunity. You just have to know how to do it. All right. So let's put it in perspective. It's not easy, but this is what we got to do to get cheaper pricing, cheaper priced property. If you put the time in, you'll get rewarded. Okay. There are properties available right now. I told you they're talking about it on Auction.com and all the news sites here that they're starting to see more stuff happening in some of the locations across the country. So what are you waiting for, guys? Simple as that. All right, just connect with me. That's my email. Send me your information, how to get a hold of you. We will talk. I've been talking to a lot of people the past couple of weeks. I know a few people I need to get back with, but if I've missed you, just resend your email and get it to the top of the list there because I do have a habit of when stuff gets buried, not getting to it. I do apologize. All right. So again, take care. Have a good rest of the week, and look forward to speaking with you soon.